Good morning, everybody, and happy President's Day. Today, we're going to talk about manias because we've got one going on right now in what's called the Magnificent Seven. But I want to show you something that I call the squiggle chart. Look at this chart. Okay, see all these little lines shooting up? You see the first one, that blue one? That was a mania in the 1960s. That line going straight up was something called the Nifty 50. It sounds so 1960s. And it was here was the narrative. Just buy Kodak, just buy Polaroid, just buy digital, just buy IBM. You'll be rich. That's all you have to do. Well, it actually worked for a while. Up they all went for either our parents or our grandparents' generation. Well, it peaked in 1964, and most of these stocks were in the Dow Jones Industrial Average. The Dow at the end of 1964 clocked in at, get this, 864 on the Dow. People couldn't believe it was that high. Shocking when you're at over 40,000 today. On the first day of trading in 1982, 17 years later, it was at 865. 17 years, 1 point, and that straight blue line up that you see, it didn't crash, it just ground down year after year after year. That's one way you can have the end of a mania. All right, the second one, this would be near and dear to our hearts. See the red line there? That's gold. From the mid 70s to the late 80, early 81. We go from actually $35 an ounce to $865 an ounce. Stunning. And if you've never seen a gold mania, you haven't seen a mania. It puts .com to shame. Anyway, up it went, down she came. And I think in 1999, gold's at 260, 270 bucks an ounce. That's a long time to not make any money after a mania. All right, let's go overseas. See the one in the middle there? It's the Nikkei. That is the Japanese stock market. This is the one this mania started early 80s and kept going to the end of the 80s. And for those of you around back then, remember when the Japanese were buying Pebble Beach? They were buying Hawaii. Japan was going to take over the world. The Nikkei runs up to almost 40,000 on their index. Then down she went. I looked at the Nikkei yesterday. It's at 39,000 today. Let's see, it peaked in 1989, and you're back to where you were 99, 2000, 36 years ago. And you're just now getting your money back, not even counting inflation. So what's the point I'm trying to make? And we'll keep going here. It's when you have a mania and they fall, it can take decades sometimes to come back. Let's do another one, near and dear to our heart. All right, the next one, next to the Nikkei one, you see the kind of the black line? That's the .com bubble. All right, you and I, we all lived through that. Lucent, Sun Microsystems, Intel, Pets.com, it's all going to make us rich. The thing falls 80%. People got their money back in 2015, and remember, it crashed in 2000, and inflation adjusted 2017. That's a long time to wait for your money back. Then the other one, let's see, going this way, there's the blue line oil, and this is a little hard to see, but underneath it is that little purple line, and that's US home prices. That was the Lehman Brothers thing. Same story. For those of us in New Mexico, how many of you have seen the bumper sticker? Lord, please give me one more oil boom. I won't blow it this time. That was all over southeastern New Mexico for a long time. Oil went from like 20 bucks a barrel to 80. Lots of money made there. Then down she goes. So what's the point? I want to show you the last one, way over the gold one. Guys, look how much bigger that line up is versus all those other manias. What is this chart? That's the Magnificent Seven. Facebook, Amazon, Apple, Microsoft, Google, Nvidia, and Tesla. Those stocks have exceeded the Nifty 50, the gold mania, the Japanese stock market mania, the dot-com mania, oil and home prices by far. We've never seen anything like this. 7 stocks have been hauling this stock market up. And we think this is going to go on forever. When this rolls over, it just won't be those 7 stocks coming down. They're the ones that have been the powerhouse. It wasn't Procter and Gamble. It wasn't AT&T or Campbell's Soup that's been driving the stock market up. It's been these guys. What happens when they roll over? What happens to the stock market? It could be a very, very long time before the stock market recovers once these guys head on the downside. So then you're probably saying to me, but wait, Greg, you don't have us in stocks. You and Walt have got us in this commodities thing. That's true. And here's what I want to, warning's not the right word, just be prepared for. When these stocks roll over, it would not be out of the question to see gold and oil and other things in the short term go with it. Because what will happen is this, there will be margin selling. When it starts to go down, lots of people borrowed money to buy stocks. Well, you have the right ratio. You've got to come up with what's called a margin call. You've got to come up with cash. This is what we saw in September of last year. Remember that morning when the Dow fell 1,200 points in like 30 minutes? For the day, the Dow fell about 3.5%. Gold, our stuff, was down 1.25%. Well, that didn't feel very good, but we didn't fall nearly as much as the stock market did. And then, of course, we recovered much faster. Could that happen again with this? If this rolls over, will our portfolios go with it to some degree? Probably. Is it a long-term thing? No. And I'll get to that next week in the missive on how the wind is at our back. I'll end with this. The people who named the Magnificent Seven, it was a movie back in the 1960s. Great movie. And Yul Brynner is in it, Steve McQueen, James Coburn, Charles Bronson. I mean, great. Except at the end of the movie, I think 5 of them get killed. And the 2 who ride off into the sunset are basically saying, well, what do we have left to live for? Maybe they shouldn't have named it the Magnificent Seven. Just saying. And with that, I'll turn it over to Walt.